Hello guys, welcome back to the channel. I will be revealing in the later part of this video my trade strategy that's earned me #1 spot in the Alpha Capital trade competition, making a 130% on the account that was handed me. And I implore you to stay back and watch this video till the very end. If you are keen on learning the exact steps I take to identify higher probability trade setups in the market, so I decided to take part in the ACG Markets monthly competition, where 2,740 persons participated in September's edition. And very quickly, if I log into my dashboard, you can see right here. So I'll quickly allow this to load up. Here you can see I started this account on the 4th of September and with a $100,000 account size. And then the closing equity, 231,381.2. You can see right here, it says a competition for the stage. So it's a competition account. And the status right here is a success status. And here, right here, we have my equity curve. And by the side here, you can see the minimum days. I traded a total of 20 days, way past the minimum 3 trading days. And then you can see the result right here, profit result right here, $131,281. And just right here, you can see some of the statistics: equity, the closing balance, my win rate, 53% win rate on the accounts. And you can see how the equity curve played out for the month. And just to give you more insights on this, on the account, this shows you more information. My best trade being a $22,430 win, and then my worst trade right here being a $30,660 loss. And you can see each of the different currency pairs I traded on and the profits and losses I incurred on every one of these pairs. You can see them right about here. And if you take this to right about here, the competition list, so the one that's just ended right here, September 2023 competition, as you can see, started out Friday, September 1st, 2023, and ended September 30th, 2023. Total challenge accounts, 2,740 contestants in total. And then you can see for the first prize, here gets to win a $100,000 challenge account and a $1,000 cash. And moving to the email that was sent to me from the Alpha Capital team. Right here, as you can see in the email sent to me, part of the prize I won is $100,000 evaluation account with details right about here. I obviously can't expose the other part of this account details to you. And then also, as part of the prize won is $1,000 in cash. You can see here, huge congratulations. Your evaluation has been issued. That I've showed you already. Can you please confirm your bank transfer details so we can have $1,000 issued to you today? Thank you. And as at the time I am recording this, I already have this cash prize sent to me already. And a big thanks to the Alpha Capital team. And also, I will pretty much update you guys on the evaluation accounts and the progress as I commence trading on that. But very quickly, let's get right into how I trade. A very simple basic concept you need to understand is higher time frames, guys. Personally, I love to go for higher probability trade setups. And this I do by paying attention to time frame correlations. So for me, I have my favorite time frames to be the weekly, the daily, the 4 hourly, the 2 hourly, the 1 hourly, the 30 minutes, the 15 minutes time frames. As I use every one of these time frames individually. So I use these 3 time frames, the weekly, the daily, and the 4 hourly time frames to identify the trend. And then I use the other time frames from the 2 hourly, the 1 hourly, the 15 minutes, the 30 minutes to identify my trade entry confirmations. Now, the first thing I do when I come into the market is I need to understand where is the trend going. Is it heading to the upside or to the downside? Because you have to understand I am a pro trend trader, meaning I am only looking to take a trade with the trend. So if all the time frames are going to the upside, I'm buying, and if they are going to the downside, I'm only looking to sell. Now, guys, it's as simple as that. So this is NZDJPY right about here. And I had an opportunity to get on a trade where I caught a 1 to 6 risk to reward on a buy move, this buy movement right about here. And as at the time I got on this trade, starting out with the weekly time frame on NZDJPY, the weekly time frame was in a bullish market structure. So I bought somewhere around this price rally, and then clearly I had the market in a bullish structure, higher high, higher low, higher high, and then this higher low that led right into the next impulsive move to the upside. So I pretty much entered with this continuation of the impulsive movement to the upside. So the weekly time frame was clearly in a bullish market structure. And then the daily time frame also, as at the time I got in on this trade right about here, was clearly in a bullish market structure. Just to explain this better, we had price bringing us higher high, higher low, higher high, and then a shift in structure to bearish structure. So I had a shift to bearish structure, and then started pointing lower highs, lower low, lower high, lower high, and then a lower low. And then we had a nice shift in the structure, breaking above every one of these lower high levels, pointing a higher high, switching the market structure on the daily time frame perspective from bearish now to a bullish market, in line with the weekly time frame. Also confirming the shifts in structure is the fact that price presented a nice inverse head and shoulder pattern on the daily time frame, as you can see right about here. So clearly on this, I have the weekly time frame bullish, the daily time frame bullish, and then the hourly time frame also. In a bullish market structure, you can see the higher high, higher low, higher high, higher low, higher high, and then the higher low that led to this impulsive movement where I caught my buy trade. So clearly we have the hourly time frame also in a bullish market structure. Now, guys, I don't sleep on trade opportunities like this when I have the majority of my time frames in sync. The weekly time frame to the upside, the daily time frame to the upside, the hourly time frame now to the upside. This puts buying trade opportunities as higher probability trade for me. And I don't joke with having the majority of the time frames in sync. Now, taking this back to the daily time frame, when once I've been able to establish the market's direction, where is the market headed, using every one of these three time frames I had established right about here, the weekly, the daily, and the hourly are for the market trends. So the first thing I do is I establish the market's direction, where is the market headed, and very clearly from these three time frames, the weekly, the daily, and the hourly time frames, the market is very much headed to the upside in a bullish market structure. So I only want to be looking to buy. And then the next thing I do after establishing the market's direction is to identify an area of interest. And from me, an area of interest would be a level that price has tested multiple number of times repeatedly. And for every one of the times price has tested the level, has had to see some form of significant movements to the opposite direction. And what do I mean by this? I had, for me, the level around the 88,500 psychological round number as my area of interest, identified from the daily time frames and the weekly time frames alone. So I like to come and then identify my areas of interest using the daily and the weekly time frames alone. So I start out with identifying the market's direction, making sure I have the majority of the time frames, the weekly, the daily, and the hourly time frames in sync, in alignment. And once I've been able to establish the market direction using every one of these three different time frames, and preferably I would love to see every one of the three time frames speaking the same language. And then the next thing I do is come and identify an area of interest, and the area of interest I identify only from the weekly and the daily time frames. And for me, this level was my area of interest, owing to the fact that price has had to test the level quite a number of times and has seen significant movements to the opposite direction. So right about here, we had price tested the level from the downside, and then we had a huge seller from the level, with the level holding up as support. And then if you can get to see right about here, we had a break above the level, and then you can see we have a weak retest of the level before we had to see price continue to rally to the upside. So right about here, we had the level holding up as support, right about here as resistance. So also here, we have the level holding acted as resistance. You can see as soon as we tapped into the level, we had a nice sell-off from the level before we eventually had a break of the level. So right about here, we having to see the level acting as a resistance. And as soon as we tapped into the level, we had a nice rejection candlestick from the level and a huge seller from the level. Right about here also, we had seen the level held as a resistance. And now we had tapped very nicely into the level right about here, had a nice rejection, and then we had a break above the level. My already identified area of interest, owing to the fact that looking to the left, previously we've tested the level 1, 2, 3, 4, 5 times. And for every of the times we tested the level, we've had huge, significant movements to the opposite direction. And as soon as I add this daily candlestick close above this level, confirming a break of the level, now I pretty much was expecting the very same thing that happened right about here. So as soon as we had the break above the level, we had a retest of the level with the level holding up as support. So as soon as I add this daily candlestick close above the level, this is where I pretty much, after identified this level as my area of interest, was waiting for price to come right back into the level to then look to go in for longs. And I had updated in my Telegram channel as soon as there was a break of that level from the daily time frame perspective. Now you can see right on my screen, I said this is 26th of September. I said NZDJPY potential buy opportunity daily time frame. I'm definitely going to be scaling down to lower time frames for buy entry confirmations when once price retests current daily key level. Now we can see this is where we had the daily candlestick break, and I pretty much was waiting for a retest of this level to go in for longs. Here you can see the time stamps and the dates included right here. And having identified the area of interest, the next thing would be to wait for price to then trade back to my identified area of interest. So clearly, I had a nice break above the level, the area of interest. And then at the retest of my already identified area of interest, I pretty much was expecting for the level now to act as a support. So because we're having to see price above the level, previous level of resistance broken becomes a new support. And as soon as price tapped into the level, you can get to see we had ourselves a nice confirmation candlesticks that indeed the level is potent. We're having ourselves a nice rejection candlestick from the level, confirming that this level is likely going to hold. And indeed, we're going to see the buying pressure kick back into the market from this level. Now, having seen this daily candlestick close as a rejection from the level would have been enough reason for me to go in for longs at the close of this daily candlestick. But then this would have given me a way too big stop loss. And the lesser risk to reward right about here. So this, you can see the stop loss would have been very big, and my risk in comparison with my reward would have been way too small. This barely made a 1 to 3 risk to reward. Now, this is where I love to scale down to the lower time frames to get even smaller entries with a bigger risk to reward, which I did from the 1 hourly time frame. Moving down to the 1 hourly time frame, at the retest of that level, my identified daily area of interest. So I had my entry for long somewhere around this price level. But very quickly taking this out so I can break down very clearly. As at the time, price had pointed the daily rejection from the early time frame. Price was playing out somewhere around this level. And then what I noticed was the early time frame had shifted from bullish structure to a bearish market structure. And then we had this higher high, and then we had a lower low. And the volume was started pointing lower highs and lower low. And now, guys, this is where it gets even more interesting. So having established every one of the other higher time frames to the upside, the weekly, the daily, the 4 hourly time frame, and then coming down to the 1 hourly time frame, I certainly was not comfortable getting in on longs yet, owing to the fact that the 1 hourly time frame was in a bearish market structure. So I pretty much was waiting for a shift in the structure from a bearish environment to a bullish environment. Having identified the last lower high level right about here, price was somewhere trading somewhere around here, as at the time the daily candlestick had closed as a rejection. So I pretty much was waiting for a shift back from a bearish market on the hourly time frame perspective to a bullish market structure. And then again, this is where I went ahead to update on my channel what I was looking to do before getting in on the longs. As you can see right here, just a day after, on the 27th of September, I sent out a trade update. I said NZDJPY playing out just as expected. Daily rejection from key level forming. Now I need a 1 hour time frame shift in structure from bearish to bullish, and I'm all set to go long on this. And you can see very clearly right here the timestamps, September 27th. Now this is where I needed that break and shift in structure from the 1 hourly time frame perspective, which I eventually did. Find the market present me on the hourly time frame. As you can see, we had this nice movement that eventually had a break above this high, presenting us right here a higher high. So this presented us a higher high. With this now being higher low that led to that higher high. So we had this nice impulse to the upside, creating the higher high, shifting the market structure on the hourly time frame perspective from bearish to bullish. And then, guys, as soon as we add this movement, this impulse movement to the upside, what I pretty much was expecting for price to do was I'd identified this hourly time frame key level area of interest, owing to the fact that multiple number of times you can see when we tapped this level from the downside, we had the level acted as a resistance. And then right about here, we had a break above the level. And then at the retest of the level aired as support. So going for longs. And then also right about here, we had the level acted as support. And when we're beneath the level, as you can see, the level held up as resistance. So as soon as I add this higher high, this impulsive movement presenting a higher high level, shifting the market structure from bearish to bullish, this is where I was anticipating for price to come into this hourly time frame area of interest for me to then look for entry opportunities to go in for longs. But that did not end up playing out, as the next hourly candlestick that would form after that was yet another very bearish candlestick all the way to the downside. And even though I'd come back all the way to the previous lows, from the early time frame perspective, we're still very much in a bullish structure, owing to the fact that price is currently still trading above the previous hourly time frame swing lows right about here. But then I would have easily gotten on longs from this level, but price, as at this time, was already trading out of my session. You have to understand, I only trade the London and the New York session, and this already was sometime around the Asian session. So I had waited now for the London section to kick back in. And then as soon as the London section kicked back in, we had price printed us yet another higher high structure. We had a new higher high, breaking and closing above the previous highs right about here. And then as soon as I saw that price had pointed this higher high, this is where what had played out right about here. I was then looking for this opportunity to go in for longs. So at the break of this, I wanted price to come and retest the hourly time frame area of interest to then look to go in for longs, which price did. And as soon as price tapped into this hourly time frame area of interest, presenting me more like a potential lower high, a potential higher low rather, this is where I'd scaled down to the 15 minutes time frame for my entry, for my buy entry on NZD JPY. I hope this allows me go back. Okay. Now, on getting down to the 15 minutes time frame at the retest of my identified hourly time frame area of interest, what I'd noticed from the 15 minutes time frame was the fact that also the 15 minutes time frame was in a bullish market structure. So this is a break and the retest from the hourly time frame. The 15 minutes time frame was in a bullish market structure. We had a higher high right about here, and then we had a higher low. Then price presented as this being the most recent higher high, and more like yet an equal low. So guys, you can see how from the weekly time frame, we have the weekly time frame in the bullish market structure to the upside, the daily time frame to the upside, the 4-hourly time frame to the upside, the 2-hourly time frame to the upside, the 1-hourly time frame to the upside, the 30 minutes time frame to the upside, and down to the 15 minutes time frame to the upside. Now, every one of the time frames were to the upside. It's a no-brainer, guys. There really was no reason whatsoever why I definitely wasn't looking to go longs here. And then as soon as I had price tapped into the hourly time frame area of interest, being this green rectangle zone right about here, I also noticed price was testing the 50 exponential moving average, as seen right here from the 15 minutes time frame, from the upside, with the 15 minutes time frame now expected to act as a dynamic support, the exponential moving average right about here, present at the very exact same level, the 1-hourly time frame area of interest. And then my entry confirmation was the nice rejection off of the 50 exponential moving average, the nice rejection from the area of interest, and then the nice momentum candlestick that stepped in, as you can see right about here. And as soon as I saw this bullish engulfing candlestick, that was my entry trigger for buys. And then I had a very tight stop loss on this, owing to the fact that every one of the time frames as established already were pretty much saying the very same thing. We're all to the upside. And then I targeted the previous daily highs for a 1 to 6 risk to reward on this movement. And now this easily would have made me a 1 to 10 risk to reward if I had hold a little longer. As you can see, this easily would have made me a 1 to 10 risk to reward, like I said. But then it is what it is. I'd secured myself a very nice, decent 1 to 6 risk to reward on this. I've been seeing every one of the time frames to the upside on NZD JPY. Now that's it, guys. If you're not yet a part of the Telegram channel, where I come and then share trade opportunities like this on a daily basis, then do yourself a whole lot of good by clicking the link in the description of this video to join. Also, please give this video a like and drop a comment, as this will help the video get forwarded to a wider audience. Do well to subscribe to the channel so you don't get to miss out on my regular dose of value. See you in the next video, guys.